just let me know so I'll mention that it's already open. How did the Nikkei close? Did it close marginally on the plus? Would you like me to move? We are filled at 104. Can I just say 105? So your target is 112, stop loss at 99, right? Okay. Third, this is February contract, right? Yeah.
Good morning and welcome to Saxo Bank's live market call. Today is Tuesday, 8th of January. Yesterday was a rather uneventful and a light day in terms of economic releases. There was a series of Eurozone indicators that were being published, all of which nearly came out along the expected lines. The unemployment for the month of November was at 7.2%, and this was exactly as expected by the market analysts and participants. Later in the day, we had Eurozone economic as well as consumer confidence figures, both coming at expected levels at 104.7 and -9 index values respectively. But perhaps the biggest surprise was later in the Asian session, as we had the Australian building approval figure for the month of November coming out at 8.9%, and this was obviously a very, very positive surprise, especially in an environment where the housing figures across the Western world have been showing distinguished declining trends. The expectations for the Aussie figure were actually in the range of 0.4%, so you can imagine the positive surprise over there. This led almost immediately to a high buying action on the Aussie dollar. On the market side, the dollar remains bit As mentioned, the Aussie dollar is rallying strongly after the building approval data, with the dollar still mixed. Fixed income bonds remain elevated, and the UST notes the UST notes rather are still bullish from Friday's week non-farm payroll figures. On the equity side, S&P 500 finding some key buying interest just above 1400 level, and this is a critical support level as well, with Nikkei relatively unchanged. Actually, Nikkei closed today at 0.19%. However, during the day, during the Asian session, Nikkei was trading at a 18-month low, so it has since recovered. On the precious metal side, there's a small triangle formation on the spot gold, as well as crude oil not finding much buying interest, so there is no breaking of any major ranges on precious metals or on the crude side. Today is another light day in terms of calendar events. We have the Norwegian industrial production coming out at 9 GMT, as well as the German factory orders at 11 GMT. Perhaps the most important economic figure of the day is at 15 GMT, and this is from US, and it is namely the pending home sales for the month of November. Later in the week, tomorrow, that is 9th of January, we have the Australian job vacancies as well as retail sales. Later in the session, or rather the beginning of the European session, we have the Norwegian retail sales as well as Eurozone GDP figures. And in the American session, we have the Canadian housing starts coming up. So what's going on? Well, dollar has rebounded after very, very weak job figures from Friday. It has rebounded against euro on a somewhat quiet day, and it has also broken a 7-day losing streak against yen, which remains pretty well offered after Fukui's comments that there is again that the Bank of Japan sees no reason to hike rates in Japan. But however, the risk with US dollar is still on the downside, and today's pending home sales again can act as a potential trigger for a renewed dollar sell-off. On the UK, as you know, on 10th of January, and that is Thursday, we have the UK rate decision coming up. The pressure on the bank is growing to cut the rates from the current 5.50, although it is only a minority of analysts that expect such a cut at this point. Tomorrow we have BRC retail sales coming up from UK, and the expectations are that they would show the weakest figures since March 2006. And if this indeed turns out to be the case, the pressure will be ever growing for the Bank of England to cut rates. On the equity side, yesterday's U.S. trading session saw some positive gains, and this was primarily on analyst recommendations of buying sort of undervalued stocks that are not necessarily affected by the economic slowdown. However, there is no change to the fundamental picture in terms of equities, and that fundamental picture is still rather bearish, with fears of recession in the U.S. growing. As an interesting news item, the CEO of Bear Stearns, James Kane, is expected to resign, and this is as a direct consequence of subprime-related losses. We have a emerging markets trade on the FX side today. We are looking to sell Euro Czech at 26.070 if offered. This represents a key support level in the pair. The pair was actually quite well bid at the year end last year. This was primarily due to lack of interest and lack of liquidity. So the pair has basically resumed its downtrend at the beginning of this year, with last week seeing almost a 7-figure sell-off. So the critical support level is approaching, and we're looking to sell it at 26.070 if offered, with a stop loss at 26.200 if bid, and a target of 25.580. On the equity side, we've established a long position in a German chemicals company, BASF. We've gone long at 105 with a stop loss at 99 euros and a target of 112 euros. We believe that the good and strong fundamentals in this case warrant a further or continued rise in the equity price or the stock price. And the technical picture also looks rather bullish, with a continued upward channel from stretching from early November of 2007. On the commodity side, our strategy today is to sell the February crude contract, sell it around 96.50. So we are looking for an uptick before we enter into a short position. Our initial target is 94.80 and a stop around 97.20. That is it for today. Thank you very much. Join us again tomorrow. Bye-bye.